Interesting to see the cover of the Wall Street Journal to say that says Europe recovers as the U.S. lags. You know, Ashley was talking about Spain as Spain was reporting this morning their economy contracted this quarter. The recession appears to be over, or at least starting to be over, for two of Europe's biggest economies. Germany and France both have returned to some growth, reporting economic expansions of nearly 1.5% in the second quarter. Now, as the U.S. also continues to struggle, is the big spending in Europe a blessing for U.S. recovery or not? How real is that recovery in Europe anyways? Tony Danaher is the President and Chief Compliance Officer for Guild Investment Management. He's joining us from Los Angeles, and then we're going to go over to London, where David Buick is standing by from BGC Partners. Good morning, David, and good morning to you as well, Tony.
Good morning, Jenna.
Good morning, Jenna.
Tony, are we getting left behind here?
Well, the U.S. and Europe have a lot, they share a lot in common with the problems with their economy and their financial systems. We like Europe with respect to Germany and some of the northern European states. They're well positioned with some of their exports. They sell a lot of high-end gear to China. But we look for fractured markets in the southern states of Europe.
So are we getting left behind?
The U.S. getting left behind? No, the U.S. is right there with it. We have better economic data in the U.S. and better economic data than the markets had anticipated 6 months ago. And the markets have been telling investors for 5 months now that the data will be getting better and the worst is behind us.
David, do you agree with that?
Jen, I can only say to you, if I could sing it decently, I'd be singing the Star-Spangled Banner. You are not behind the curve, not by any stretch of the imagination. I am slightly concerned about the depth of the problems that the U.S. banking system has got itself in, and that, I think, probably is going to make the recovery perhaps a little bit more troubled. But it is interesting to note, and it is important to note, that out of 24 countries, there are only really 2 who are doing really well, and that's Germany and France. And basically, both of those 2 countries have 2 things that the United States and the United Kingdom don't have. They don't have the retail borrowing or the consumer borrowing, which is a really good thing. And also, their whole ethos towards owning houses and having debt is much lower. And therefore, because they've got a much broader economy and have paid proper attention to manufacturing output and industrial production in those 2 countries, whereas the UK hasn't, they are ahead of the curve. But Europe has got major, major problems. Ashley spoke this morning about Spain being 1% down. It's got 15% unemployment.
Right,
it's got a big, big problem.
Well, so David, let me stop you there. And if you want to break into the Star-Spangled Banner at any time, David, you can go ahead. But you brought up a really important point about consumers. And that's something that we saw yesterday in the retail data here in the United States, that consumer spending here is still constrained. David, who do you think is the most important consumer in this recovery?
Well, the trouble is, I think it's terribly fragmented, Jenna. Basically, Walmart was fine yesterday, but the real accolades went out to Asda and also their German and French outlets, which did extremely well. 2% increase for Walmart for the rest of 2010. Well, it's okay, but it's not outstanding. But when you see the likes of Abercrombie & Smith, who last quarter reported a 28% drop in profits, and looking at what their earnings per share is forecasted to be, is not going to be wild. We need to see this pick up. Basically, people's in the United States hands seem to be underneath their armpits, and also their pockets seem to be on the floor. We need them to get closer together and get down to those shopping malls, because saving is understandably in the circumstances, and repaying debt is. But that's not what's going to get the U.S. out of this condition. We need them spending 70% of GDP in the past. We've got a long way to go.
Tony, do you think that the economies, I mean, we look at Germany and France showing some better results, but are some of the results, even the data points that you mentioned, the product of an overstimulated economy? There's so much liquidity in the system because of the different programs. Is this a real recovery that we can bet on?
Well, there has been a lot of monetary and fiscal stimulus in the United States and in European nations. And this does beg the question, can these economies grow beyond this stimulus when the stimulus wears out? We have to do something about the job losses. We have to be able to put people to work. In order for the economies to grow long term, you have to create a multiplier effect, and that's going to come through job losses, not through short-term stimulus, cash for clunkers, that they have here and they have in Europe.
And that was a successful program for sure in Germany. All right, David, Tony, thank you, gentlemen.